everyone, you're probably wondering what the hell happened with Okex. Well, I'm going to tell you in a nice short segment today with crypto education with your boy, Mr. Joel Kofshoff, or as you guys might know me as, Coach K. So today we're going to jump in and talk about what happened at Okex. What is a Bitcoin, going long or short, and how does that affect the market? So basically, Okex has ability to either short Bitcoin or buy it long. Meaning, if you think it's going to go up, you're going to buy it long. If you think Bitcoin's going to go down, you're going to short it. And usually it comes with margins, meaning like the exchange or someone is covering for X amount extra money that you don't even have. So what actually happened was Okex tried to liquidate about 980 Bitcoins worth of long positions at $8,050, but that was right as we saw Bitcoin start to drop drastically as to where it is right now beside me. So what happened was they got stuck. And it's a really weird system because normally if you're using an institution, the institution has to cover that if they can't fill shorts. But what happened was Okex doesn't have the insurance to actually cover all the shorts. Or all the longs, sorry. The shorts now are going to have to cover the longs. Let me explain how that works. Because it's really, it's kind of confusing, but it's actually really simple. So, coming in here, you can see above my head right here, the total insurance that they've actually accumulated for their actual fund. Well, it was only equivalent to 10 Bitcoins. And as you guys know, 10 Bitcoins is nowhere near enough money to actually cover all those shorts. 980 Bitcoin is far more money than 10 Bitcoin. So that didn't really help very much. So what happens when the insurance doesn't actually cover, when it doesn't cover our short position, when we try to liquidate and we end up stuck with $450 million of trades on Okex. Now, if you're wondering why this price is where it is, that is a lot to do with it. FUD always makes this market react that way. Fundamentally, this is how our market reacts. We are not a stock market. We move a lot faster. We are way more volatile. And so because of that, it's good, and it could be very bad for you if you're a trader. Now, who is going to cover this loss? Well, I'll show you guys. Let me just make this a little bit bigger for you to see a little bit about this liquidation and how it all worked, so you can actually visually understand what is Coach K talking about. So if we look at it, you can see right above my head, just above my head right here, it says 946 Bitcoins worth of longs that are getting closed at $8,020, and then we have a few small margin calls above it. But look at the size of that above my head. So they have to cover all of that. Who is going to cover that when you only have 10 Bitcoins worth of insurance? Well, this is where it comes to what I like to call, or what they like to call, as the clawback method. So the clawback method works like this. If you go long or if you go short, okay, so let's say I go long, I'm a long trader, and Bitcoin starts to drop and it has to close. Well, in a clawback method, I have a short and I have a long. Well, what happens is, instead of actually the exchange or someone, and this is built into their system, so this is something that you would have known before you even got into it, but if those longs can't be covered, then they use the profit from the shorts. So if you shorted Bitcoin, you're like, yes, I'm doing really well, it went down $1,000, great, I'm killing it. Well, unfortunately, you wouldn't be killing it as well as you are right now, because you actually are the people who are going to cover the losses from the long. And that is why the clawback method kind of sucks if you're a trader, and people trading on Okex are probably going to be very upset about it, but this is the way it's going to go. So if you can think about how fundamentally this is affecting the market in a very negative way, it shows. And this is from about 18, 19 hours ago. So it obviously is one of the main reasons why we dropped closer to $7,200 resistance. Are we to worry? Absolutely not. It's just FUD. We go through these cycles all the time. And weird enough, it comes right before our SEC announcement for the CBOE's ETF. So I predict that where we're going is we're going to go down a little further. We're going to bounce off the $7,200 resistance line, and we should start going back up after this announcement next week, in a week today. So brace yourselves, hold on for dear life, don't freak out, don't stress out. It's going to be okay. And if you're someone who likes cryptocurrencies, the fire sale is on. One chain's $1, ICX $1. Like, these things are crazy. Neo is almost 25 bucks. Guys, look at those very, very heavily with strong eyes and strong hands, and believe in what you're going to use your cash flow for. I'm not telling you this is financial advice. I'm not a financial advisor. I'm telling you my educated opinion based off what I will do, and you do not have to follow that, just so you know. All right, so clawback looks like this, a really good visual just to end off. What is a clawback? Well, basically, this guy's the guy who shorted the market, and that's OKX with the ban hammer right over there. And basically, what OKX does is go, okay, well, you can keep most of your positions that are in the short positions, but we're actually going to take a bunch of it to cover our losses. And literally, there's nothing anyone can do about it. So that's the kind of, it's kind of funny, but it's not funny, but anyone can do that. So if you write in your contracts for your short and your longs that you'll cover each other if there's any anomalies, that's what happens. So it sucks, it's unfortunate, but we're going to be fine, guys. And remember, our $7,200 resistance line is freaking strong. And if you look at the wick-off chart that I placed a few months ago, it's kind of following nearly almost exactly where the wick-off was telling us we're going to go. Here's really funny. So look what we did. We went, this is my chart from like a month ago. We went from 7,200, broke through it, went up almost to 83. I had 8,000 something there, right? Now we're dropping back down, which is just a little bit higher than 7,200. We're kind of right on track. So once we have this LPS drop, we should see a spike closer to $9,100, $10,000, around that range. And then we're going to go down and up, consolidate a little bit, and then we should go up to 14. Followed this chart almost to a T. 7,200, I said it breaks through, we're going up to 8. We did, and we went to 84, 85, and then we came back down a little bit. Round, and if you look at this chart right here where my finger is, there's not a very big difference between the 72 range and where we're supposed to drop off to. So we're not that off. I believe we're right exactly where we're supposed to be. Chill, it's good. Corrections are great. Get more in the dip. That's all I gotta say. All right, so you guys have a great day. Remember, OKX, what they did, not okay for some, but nothing you can do about it. I'll see all you guys soon. Have a great day or evening wherever you are in the world. And Coach K signing off for the day. All right, everyone. Have a good one, and see you soon.